Hi, it's Adam Hewison. I'm coming to you, as always, from the digital studios of MarketClub. And today we're looking at the USD JPY. We looked at this before, and as you can see, we had a pretty big move down late last year, down to around the 88 level. And then we saw the recovery, and now it just sort of seemed to be rolling over. Now, in my last video on July 10th, we actually featured the dollar yen and what we thought was going to happen. And I want to bring this to your attention today because several things have happened that are very, very important in my mind in analyzing this market. So let's just take this off the screen for now. Let's scope this in a little bit, and that's good. And as we were talking in our earlier video, we were saying that we really thought that this area here was really a big area for this market to fall through. We did break through on the downside. That was a breakout right here. And then we've had the recovery back. Now, what's important to look at in these recoveries is just how far the recovery actually goes. Now, I'm going to scope this out, take this off the screen, go in a little bit further because I want to show you this because I think it's very, very interesting when you look at rhythms in markets. So I'm going to include our Fibonacci tool, which I love. We're going to start from this point here, drag it down to there. And what do we see? I've got to get this absolutely perfect. So they're right there. These are close only. It's a close only chart. And this will numbers will be a little bit different on a high-low chart, but not very much different. So here we are. We saw the recovery from this point here up to this point, a 50% retracement from this entire down move, 50% retracement. Okay? So off the screen again, I'm going to grab a Fibonacci tool. I'm going to drag it. See how flexible this is? Just drag it down to the next big low. Take this down to the next high, which is right here, where you would measure from. And look what we get now. We get the same thing, a 50% retracement. Isn't that remarkable? That's the type of rhythm we are in the Japanese yen dollar relationship. Now, we had a signal today, which I just put that in. You can see right here, I'm going to take the Fibonacci off because otherwise it gets a little bit confusing. But you can see we had the signal today at 93.56. We did mention this on the blog. Market's currently trading at 93.43. We're doing this live during the day. It's approximately 12:30 Eastern Standard Time. Our prices on Forex are real time, so you have that to enjoy. And if you looked at our earlier video, we're looking for this market to continue to go down, eventually break through this level here, and test the 88 level. Now that's going to be, scope that out, it's going to be back to the lows that we saw in this area here. So we're looking for a retest of this low and potentially going through there. But for now, we'll settle for a retest of these lows. And I think that's the important thing to look at. Now, the MACD is a little bit disconcerting. The MACD is sort of rolling over again. It's it's just a weak formation for the dollar right now. And it looks as though we're going to see this market continue to erode, especially with today's sell signal. If we go further out, you can see that this market has not been, the dollar has not done well. Every recovery has been short and then a violent move down. I think this is going to be another move down, potentially to new lows, but certainly to test the 88 level in the interim. Hey, this is Adam Hewison. Thanks for stopping by, and thanks for letting me share these ideas with you. I enjoy it, and I hope you get some enjoyment and you learn something about the market. So, all the best.